Investors currently have a compelling chance to acquire shares of a rapidly expanding artificial intelligence company at an unusually attractive valuation. Palantir Technologies has risen to the top tier of investor favorites in recent years thanks to its role in the artificial intelligence software boom. Its stock has climbed an impressive 160% over the past 12 months as people rushed to buy shares and capture the ongoing surge in demand for artificial intelligence tools. This immense enthusiasm, along with a remarkable 3-year rally, pushed Palantir's valuation into extremely elevated territory. Once a stock becomes that expensive, it is natural for price pressure to appear, especially when investors pause to reassess whether the steep valuation still reflects realistic long-term expectations. During that period of reflection, something interesting emerged. Another artificial intelligence-focused company delivered a performance that far outpaced Palantir's already stunning run. This company has soared by 197% in the past year, yet it trades at a noticeably lower valuation than Palantir. Its financial results and operational momentum reveal why this discrepancy exists and why investors should seriously consider seizing this opportunity. The driving force behind this company's extreme rise comes from a vital but often overlooked component of artificial intelligence infrastructure: ultra-fast data transmission within modern data centers. Artificial intelligence workloads rely on incredibly heavy information flows. Massive amounts of data need to travel quickly between servers, processors, and storage systems so that large language models, generative applications, and inference systems can operate without delays. The most advanced graphics processing units lose much of their effectiveness if the surrounding network cannot keep pace. A powerful engine cannot perform well when paired with clogged fuel lines, and artificial intelligence systems face a similar bottleneck when networking hardware falls behind. This is where Lumentum Holdings enters the story. The company builds advanced optical and photonic hardware that drastically increases the speed and efficiency of data movement within communication networks and high-performance data centers. Its laser components and optical transceivers have become essential tools for companies needing to keep pace with the incredible bandwidth demands of artificial intelligence. As organizations scramble to expand their artificial intelligence data center capabilities, Lumentum has been swept up by a wave of skyrocketing demand. Michael Hurlston, the company's leader, noted that artificial intelligence adoption across the world is powering growth in both its laser chips and its optical transceivers. He emphasized that over 60% of Lumentum's entire revenue base now comes from cloud infrastructure and artificial intelligence-related systems. That revenue is generated both directly from the hyperscale operators who run the world's largest data centers and indirectly from equipment manufacturers that integrate Lumentum's components into their own products before delivering them to end users. Financial performance from the first quarter of fiscal 2026 underscores how dramatically the artificial intelligence era is reshaping the company. For the quarter ending on September 27th, revenue surged by 58% year over year to reach $534 million. That alone is impressive, but the earnings story is even more striking. Adjusted earnings increased by slightly more than 6 times compared to the same period last year, rising to $1.10 per share. This powerful jump came from improved manufacturing utilization, meaning factories and operations ran far more efficiently, and from a more favorable product mix dominated by higher demand, higher value data center components. These factors combined to lift the company's adjusted operating margin by nearly 16 percentage points year over year, reaching 18.7%. Such a margin expansion signals stronger scaling across the organization and shows that the growth is not simply superficial revenue expansion, but a deep improvement in core profitability. Looking ahead, Lumentum's expectations for the current quarter point to continued momentum. The company forecasts revenue of $650 million and earnings of $1.40 per share. Both numbers exceed Wall Street's outlook by a wide margin and reflect a major increase over the prior year's figures of $402 million in revenue and 42 cents in adjusted earnings per share. These upward revisions provide strong evidence that Lumentum's surge is not temporary, but part of an ongoing structural shift tied to global artificial intelligence investment. Long-term prospects look even more compelling when considering the broader industry outlook. A leading estimate indicates that demand for photonic components, the types of products Lumentum specializes in, could expand by 8.6 times across the next decade. That would bring the annual market size to $54 billion by the year 2035, a dramatic rise from just above $6 billion today. The key driver behind this explosive growth will be the rapid global expansion of artificial intelligence infrastructure, which needs ever faster and more efficient optical components to run effectively. This positions Lumentum at the early stages of a potentially transformative and sustained growth cycle. The company's own revenue projections for this year, which indicate $2,590 million in expected revenue, reflect a rise of 57% compared to last year. That impressive expansion signals that Lumentum is capturing a meaningful share of the photonics market already, with the possibility of expanding even further as competition intensifies and demand accelerates. The valuation picture strengthens the investment narrative even more. After a substantial climb over the past year, Lumentum still trades at just 39 times its forward earnings. Its price-to-sales ratio stands at 9, placing it in line with the overall United States technology sector, despite being tied to one of the most powerful and fast-growing technological trends in the world. In sharp contrast, Palantir trades at a sales multiple of 114 and a forward earnings multiple of 175. That means Lumentum is growing faster than Palantir, is exposed to a booming artificial intelligence infrastructure market, and yet trades at a fraction of Palantir's valuation. Investors often search for growth at a reasonable price, and Lumentum fits that description far better than many of its artificial intelligence peers. Analyst expectations reflect this momentum. Forecasts suggest Lumentum could reach $9.36 in earnings per share over the next 3 years. If its valuation multiple remains steady, quite possible given its bright growth trajectory, its stock could ascend to $365. That represents a potential return of 51% from current levels. But that estimate may even be modest. With the photonics market expected to balloon in size and artificial intelligence investment accelerating worldwide, Lumentum could outperform expectations if it continues securing design wins, improving manufacturing efficiency, and broadening its customer network across major cloud and enterprise players. When a company sits at the crossroads of a rapidly expanding market, valuation upgrades often follow, creating additional upside beyond baseline projections. In other words, Lumentum combines a powerful earnings acceleration, strong revenue expansion, healthy margin growth, an advantageous industry position, and a valuation far more attractive than many artificial intelligence-focused companies. All these elements make it a standout candidate for investors seeking exposure to the deeper infrastructure behind the artificial intelligence revolution, especially at a time when many artificial intelligence-related stocks trade at premium levels that leave little room for error. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.